Thank you for this wonderful opportunity, Ankit, and kudos to the great job you are doing about educating a lot of people. It's a very important thing in sort of markets which can take people for a ride, and I have been one of the persons who have experienced that. It's very interesting that you do such nice work and help a lot of investors. Thanks for that, and thank you for this opportunity. About a bit about myself, I have been in markets for more than a decade, and uh, have been sort of learning a lot from. Starting with Sanjay Bakshi sir, who provided sort of a light of which direction you should go in. I have been on the way learning a lot from fellow investors, a lot of mentors I have had, and all the credit goes to them. Obviously, books and all they help a lot, and personal interactions with a lot of these investors are like sort of a frosting on the cake. So it has been a wonderful journey, and markets have been very kind and rewarding for me. That enabled me to be on my own since last 2 years, and I hope to continue this journey for next few decades. Uh, we can, I think we can start this presentation, and through this presentation, any of you, if you want to ask any questions, please feel free to raise your hand and ask questions whenever you have a doubt. You don't wait for any breaks or towards the end. And depending on the interest, because this is a sort of a niche sector, E&P companies, exploration and production companies, or which we call upstream companies in oil and gas sector, and which are private and listed. So you know ONGCs and Oil India, they produce gas, but they are government owned or government promoted companies. This HOEC company goes back a long way. It was founded in 1983 by the founder of HDFC Bank, H.T. Parekh. And HDFC Bank is still invested in the company, but they are selling their stake now. But they had a good stake of almost 11% in this company throughout the journey. Recently, they have started selling their stake. In between, like during the time from late 90s to mid 2010s, the company has changed their promoters or their hands many times. So company went to couple of three MNCs before it came back to Indian hands. So it was Unokal Bharat, Duren Energy, ENI. ENI is still a big name in the industry. So they were the latest promoters of the company before it came to Indian hands in 2015. In the meanwhile, they had one big asset called PY1 in Kaveri Basin, which was commissioned, but they faced some structural problems and it was shut down. So that was a very big roller coaster ride for the investors at that time. I'll come to that. We have a slide on that as well. In 2015, a guy named Mr. Ilango and Mr. Jiva both have a good background in ONGC and Kane. They had decades of experience in oil and gas industry at the same value. So if crude is $100, the same amount of energy can be generated at $16. So they both achieve energy parity at that. Now, historically, gas was trading at a discount to that energy parity. Now the gas has started trading at a premium to that energy parity because of its inclusion as a green fuel, right? So these guys got the gas auction for a 2-year offtake, and GSPC won that auction, and they will be earning $22. Sorry, 22% of the previous month's average Brent, which is way above their cost of production. So initially, 2-3 years back, when this was not there, energy prices were also low. When I started understanding this company, I was putting the gas of B80 at almost $4-5. But this is a huge bounty that has come around, right? So this is a big development. And if you think $22 is high, if you take gas from IGX, you will get it at north of 35 dollars. So the energy prices or gas prices in the on the spot market are way higher than that. But $22 for a long-term contract is a very good contract. ONGC also recently came out with a tender with a floor price of $15. So that's sort of a new paradigm shift in terms of the gas prices that we see. Uh, is that clear?
Pranal, hope this is.
Yes, that is pretty clear. Thank you for clarifying that.
Great.
Thank you, Pranal, for asking this question. So, Manan, there are more hands being raised. I'll just.
Please.
So, Avdut, I have sent you a request. You can ask your question now.
Good morning. Thanks for the opportunity. Just I don't get how they get revenues. That part I don't get normally whenever I come across this company. Can you simplify it? Because some part they can sell it into the market as per the APM price. There is a ceiling, and some part, as we were discussing now, that BAT there is no restrictions. How they make revenue? Can you simplify it a bit? And how much they can sell it to link to APM prices and not to APM prices. That part is a bit confusing for me.
Right. So, Avdut, what happened in 2019? Government came out with sort of a marketing freedom. So, the DSF auctions that started happening, DSF are nothing but discovered small fields. Let's say ONGC has a big field, BAT, through which it is producing, but there are pockets of gas and oil around that field or through that field because it's a huge basin. But smaller pockets which ONGC cannot produce economically because it's too small for them. So those are the discovered small fields that government started auctioning off because they were just sitting and ONGC or Oil India were not producing from them. So they started inviting private participants to sort of get produce from there economically and sell in the Indian market. So the idea is for India to reduce its energy dependence outside. While there is gas, India has not grown gas production for last 10 years, and the production is sort of stuck or declining. Now the people who won DSF